here you go. You got everybody running in heat. You got $14 on the high. Right now, that low is 10.65. They still got a $4.05 gap because we had a nice drop down to around the 578 area in pre-market right here. Here's that pre-market. It was an orchestrated to get the people in it. You can see what they did. They got this thing down here to 579. And the thing about it is, it was a huge gap down. Oh, we even have a live video during the time with people getting short, getting people ready for it. It's the third event, two events last week. Intraday high shorts have worked. Pre-market short this morning has worked. The low of that is right here, and I can tell you it was 578.45. Okay, that is where that pre-market low got put in. And I can even tell you it was 3/19/2012, 8:51 a.m. Eastern Time. And that was that low. And right now we're getting up. This is just a tick chart, but I wanted to let people know that in pre-market we were there. And boy, we had some people that were ready, that were on it and buying the dip. And we had MMTs buying off that bottom and then running that up. So that's the pre-market recap. So everybody will have an understanding of how to create a headline. I mean, this thing was up here. I told everyone it was up here in the short was, it opened at 602. That's where it actually opened. The high was 605. So my MMTs know that short from 605 down to the lows here in pre-market live right now to 578 and buying off of that bottom here and now and understanding how do I take advantage of the pre-market futures. Okay? And how do I use the pre-market futures and why am I always on lookout and what is the manipulation, that markets do to get these kind of numbers and these kind of entries. And once again, it was all about Apple being extremely overbought as it is. And we have a reversal right up my price target at 681 on price line. Yes, on that 3-minute opening bell with 36,000 shares with a $4.14 gap to sell short at the intraday highs and walk away with the profit. Buying the put options that we had featured earlier, they got to 640. They're 630 by 690, 720. That's the opening bell spread with a closing bell of $9. So let me move away from there, and I'll get that out of the way. We'll keep price line over there. Another thing we're watching is this Apple put option. It only has a $1.60 range, and it was a 560 put for April. They did not take a lot of premium. They only took $5, not even $5 premium out from the close. I'm talking 16.19 to 11.90. That was Friday's close. But nonetheless, that was that 560 put there that people had been buying on Apple last week. You can see that the $600 put had an 1840 high and a $13 low entry down here with a $10 markdown to the wholesale bid. Yes, they marked it down to $10 and they made a high, and here's that range. And like I said, when a stock like Apple is overbought that it was going to be on the gap, you can see that money flow. Look at it whip in there, 173 million right now. That's where they're buying it. Anyway, listen, that is the conclusion of learning how to take advantage of pre-market MMTs and the people that we hear and people that were buying off the bottom. You can see why that these lower volatility dips continue to work, and shorting the over-exhaustion highs when that, like I said, you could trade, I said it last week, you could get north of 600 up toward that 607, in the shorter time frame, but 617, that's not out of the ordinary. And you got right to these highs up here, and I'll draw a trend line once again and recap this. This is be something that will be around for a long, long time, Mr. Plain. And it's how people don't know how to get the wholesale entries down here. They buy up here because they feel the bottom made them feel safe. Well, no, the safe is getting the entries here and selling them back to the public up here and selling short these moves. That's the Apple update. I'm going to close down the tick chart. We all know what the lows were. So I'm going to go ahead and put the Apple computer. We got a 599 with a 6 handle reversal. This is at opening bell, 6 minutes, 6:36 a.m. Pacific Standard Time. The date is 3/19 of 2012. It started off on Monday in an overbought gap opening pre-market is what the history is. The history is wholesale entries versus retail. It's also very important that everyone that's in the apprenticeship year is that you don't put anything past the market. And as you're learning how to short the highs of price exhaustion, like ISRG 530.04, bid 528. That's a $2 move right there. Look at here, 528.95 pennies. That's an 85 penny spread. So learning to make markets with these names, because the stock market's changed a lot. And it's something that we want you to always know. And it's a gift from us to you.